I think the market's obviously reacting to what we're seeing in terms of just supply and demand data, inventories that are coming through. And it's a tight market. Obviously, Russia is sending more of its crude into Asia, particularly India, into a lesser extent China. So it is making up for some of the declines in Europe. But, you know, we've got a European economy and a US economy where you're seeing this recovery post-COVID. I think really what's incredible about Brent at the moment is, you know, we're at $122 Brent at the moment, and China remains, you know, in partial lockdown. You know, if we see a reopening of the China economy, then I really think you'll see prices move significantly higher. In the short term, I think we are going to see prices move higher, but you're right that the risk is that the higher we go, the greater the risk that we induce some sort of energy-led recession. If you look at the oil as a percentage of GDP, it's coming up to around 4.5% to 5% of GDP, and that's typically the level that you'll start to see demand destruction kick in. So I think the higher we go, the greater the risks, you know, for the economy that will become almost self-fulfilling for oil in the sense that, you know, higher prices lead to, you know, weaker demand that will, you know, ultimately top out the cycle. But I think it's possible that we'd see Brent, you know, go as high as $150 a barrel. There's a massive risk premium now on oil as a result of Russia. I mean, Russia's just a huge supplier of energy to the world. If you restrict Russian energy flows, you've got to make it up from elsewhere. And that means moving higher up the cost curve, because remember, Russia's at the low end of the cost curve, but it means more investment. And what we're seeing at the moment is still investment running in the industry about $350 billion a year, almost half of what we saw in 2014 levels, because a lot of producers worried, you know, about peak demand, you know, decarbonisation, so reluctant to make the real long-term investments that are needed. And we're also looking at OPEC, which is sitting on, you know, maybe as low as 2% spare capacity. I mean, these are very low numbers, and as OPEC continues to ramp up production through to the end of the year, you'll see that spare capacity coming down. So it really is a very tight market with very little that's going to hold oil back other than demand coming down. And I think the only way demand comes down is some sort of energy-led recession, probably.